Hey everybody, welcome back to Not Financial Advice. I'll have you like the video, subscribe to the channel. If you have seen my videos before, you'll notice that this is my first portfolio update since I hit about 83,000 around 4 months ago. Currently today, I am sitting around $93,050. This is not tracking the splits on SCHD as well as Cintas, but it's true. I'm at about $93,000. So if this is your first time watching one of my videos, you might have met me recently at church or work, some of my new friends. And so a fun fact, if you didn't know about me, is that I really enjoy investing and finance as a hobby. And so I always love to be able to share, whatever I have learned with anyone else who's interested. So what we're going to do today is just a review of my entire investment portfolio, which is tracked here on Google Finance. And I thought something that would be fun or illustrative to start with is to sort of compare and contrast how I've done versus the S&P 500 over the last 12 months. And so that's what we have shown here. Let's go ahead and make that selection. So comparing my portfolio, which will be in blue, to the S&P 500, in the last 365 days, the market is up about 31.6%, where I'm up about 29.6%. And so overall, as an amateur with 3.5 years of experience, I'm pretty pleased with this. Furthermore, without owning a single individual share of NVIDIA or any direct Bitcoin, I think that this is a pretty good accomplishment. So getting rid of this and just looking at the 1 day view here, this was a pretty nice way to wake up on my day off somewhere around there saying, wow, I've made $1,000 while I was sleeping in. And guys, that's really the power of investing. It only gets better over time with the power of compound interest. So there's still a lot for me to learn. I haven't made a terrible amount of money for all the hours and time that I've put into this, but it's better than inflation and it's better than nothing. And I'm really proud of the results that I have so far. So guys, getting into this, I'll ask you to like the video, subscribe to the channel. But yeah, looking at this, I was down as much as 40% in the bear market of 2022. So altogether, looking at about the last 3.5 years, around 8% returns a year. So, like I said, not bad for a novice investor, but now I'm getting a little bit more experience under my belt. And again, as I said, I'm pretty much pacing the S&P 500, which has had a crazy bull market, one of the best in certainly decades. So, what's going to be helpful for us is to take a look at what some of my biggest individual holdings are. And so, we'll go down here and take a look. My top holding is, in fact, the entire United States stock market. So, this is my what if I'm wrong position. And so, as far as that goes, I've got about $19,700 of value there, and we can actually visualize it. So I'm up 40% on this position, and that's pretty cool. But my next largest position is Amazon, and that's really where this whole investing story journey starts. So you can see here on Amazon, it's a single stock that I own. Really, it's more of a conglomerate. It's multiple business under one hood. And it seems neat here that I'm up 21%. I've made 1,400 bucks. That always hasn't been the case. I've been down over 50% on this stock before. And it's what really, shook my conviction early on after watching a bunch of Warren Buffett videos and thinking that I knew everything. It was shocking to think that you'd picked a great investment and you thought the price was good, only to see it get chopped in half. And so that really let me know about my level of risk tolerance. So, good news for me, I never sold, but I didn't buy enough when it was down. What I did instead is I bought other positions. Now, luck or coincidence, those have actually worked out really good for me. Some of the things that I actually diversified away from Amazon into would be things like Netflix, Williams Sonoma, and Coinbase, which all have been tremendous winners for me. So up nearly 300% on Coinbase. Concept here is when people are mining for gold, sell picks and shovels. Williams Sonoma, the concept here is that women drive consumer spending in the United States, and ritzy upper class women are going to buy $300 French cast iron skillets. It wasn't that sophisticated of a bet, but that's the bet that I made, and the results that I got are there, up almost 150%. Same story with Netflix. The idea is that They have a strong economic moat of content, a content moat, content that can make someone laugh, smile, and cry. That simple luxury of $20 a month is something that I won't cancel, and apparently others won't as well. Their ad tier, as well as live streaming, and other decisions that they've made have really been a boon for this stock. So, getting into some other stuff here, I've got a Vanguard small cap value. And so it's been said in the past that there's a premium to owning smaller and more value-y stocks. But I started getting into this position when interest rates were not being cut. The market didn't know when interest rates would start being cut. And I had done, through some of my research, which is highlighted in other videos here, done research and seen that small cap stocks grow 30, 40, 50% a year for the first couple years after interest rate cuts start rather. Thank you for staying with me. Like the video, subscribe to the channel. But I decided, instead of just going for all small caps, I wanted to go for small caps that actually had profits. That way, if my sort of bet on macroeconomic factors, which is not a smart way to invest, if I was wrong there, I still would be left with something of value. And in fact, I have been enjoying nice returns around 30% over $600 in that. And so, that rounds out, it looks like, my top 5 or 6 holdings. So the total US market: Amazon, Coinbase, Netflix, pretty big names, but also weird names like Williams Sonoma, and less popular investment strategies like small cap and value. So as we go through the rest of these, what I'll say is that I think the portfolio was not ever designed to be this way. It wasn't designed to have this is actually about 70 holdings, including about 60 stocks, or 55 stocks. It was never designed to be this way. But at the same time, what I'm left with is a portfolio that is not only more concentrated than the market, but also, I believe, features different sized stocks in the market, such as Smith & Wesson or Winnebago, a small cap and a mid cap stock. So featuring smaller stocks, featuring stocks other than technology stocks, also with a tilt towards value, and also to either international stocks or stocks with international exposure, as well as some stocks that have a little bit of a lower PE ratio or higher dividend yield. So I'm not really a growth investor or a value/dividend investor. I own both. And I think the idea, the concept for this portfolio is to have a perpetual bicycle of motion. And when one foot pedal is down, when growth is down and value is up, I'll buy growth. When it's inverted, I'll buy the other asset class or type that is out of favor, if that makes sense, right? So if we in 6 months are in a position where all the tech stocks are down again, I'm going to have value that'll be going up. But again, for my second time, I'll go in and I'll buy value stocks at a discount, but I'll be able to do it even more aggressively and with more conviction than when I learned my lesson under investing in my highest conviction bet. So we've talked about some of these. I'm going to run through probably what's the top 15 of mine and just sort of give a quick explanation on them. And then I'll go down and you can pause and you can kind of see the total value I hold and what type of returns that I've had. But I also have Cummins. They make diesel engines, Visa, Salesforce. It's like a Rolodex for Fortune 500 companies. It's where they keep all their contacts to sell products and services to. Turning Point Brands, that was a play on cannabis legalization. They sell rolling papers. They sell zigzag rolling papers. So that was a good bet. That was a contrarian bet that's made me over 100% in returns. But you also have a Vanguard large cap growth ETF. I sort of rolled a previous workplace thingy into that. Got almost 62 points out of it. So I'm happy to just leave that money there forever and, reinvest dividends, hopefully. But then you can see Apple. That's one that's been higher in the past and it's gone down. I think as you saw Buffett cut that, I think it'll continue to just print more and more dividends. So I'm going to keep it as it is. Then you can see things like Best Buy. My idea here is that certain retail stores will never go away. Mom's going to want to see how the washing machine works before she buys it. But you could also see this as a play on interest rates going lower, or AI technology, physical technology, or hardware be it watches or screens or projectors or devices being sold at eBay, either online or in their physical locations. I'm happy to hold this and collect a large dividend to see if I was right and this is undervalued, which I still think it was, but I'm waiting. I'm getting paid to wait. And so this is where we're at. Rounding it out, we've got a large cap value ETF by Vanguard. And again, I mentioned there was an error. So I have about a similar amount of value in SCHD, about $1,500 worth there. But you can see the rest of these. There are some sectors, financials. It's good that I own that right now. Mexican Coke because it tastes better with cane sugar in a glass bottle. Aerospace and defense. Here I own the total world market, healthcare, and getting into some defensive names, Ulta Beauty, VPU. Here's international dividend payers, totally international market, ex-US, gold miners, picks and shovels, Casey General Store, because if you're from the Midwest, Home Depot, Tesla, et cetera, et cetera. And so I'm going to go down and just sort of pause and let you see some of these different holdings. If you have questions about any of these holdings, ones either that I've explained about or others that I haven't, definitely reply back and comment, engage with the video, like the video, subscribe to it, share it with someone who you think would feel this was interesting content. And so these are some of the other positions I hold. New positions, if you've been someone who's followed my channel for a time, new positions I want to talk about me owning are going to be Uber and Airbnb. We'll talk about that on a future video. But you can see some of the other positions I'm holding here. One of the ones that I'm going to want to talk about, I think I'll do an analysis on Amazon stock, my highest conviction individual holding. I think that'll be the next video that we can have to look forward to. So you're able to see all the holdings down here. Now they're getting really small, just marginal positions. But this is rounding out my holdings with my smallest position bets being Cintas. So I actually own more of that. There was a stock split there, but I guess Pepsi and Kraft Heinz and Johnson and Johnson are some ones that I'm down on and don't see a need to necessarily spend more on. And here's some other ones I've sold out completely. So I've done a good job buying, holding, buying more and not selling, but also working to cultivate data, behavior trait that when I realize I'm wrong, to take my losses and move on to something else. So if you've stayed with me this far, make sure that you like the video, subscribe to the channel, bell notifications on, and I will see you on the next one.